The question I'm going to ask is a very important question for the record. So I would like for each of the witnesses to answer it. And I know that each of you represent a small business, but you're representing also 5 different associations. And I would like to ask you the following. To date, the administration has allocated nearly $38 billion to the domestic auto industry. How much of these resources, if any, are going to the small firms that supply the big manufacturers? Mr. Reed.
I'd have to check for sure, but my opinion is in our area of machine tool manufacturing, I don't believe any dollars have gone in to our
Mobile Medical continues to attempt a dialogue with the NAC.
Although I do believe that in General Motors' case that there are small suppliers that are signed up for the
of keeping patients and staff inside the VA system for their
either the early pay or the receivable protection program, although it be somewhat few. The reality is that most of those have not been the funding has not flowed really on any of that. And of the $38 billion, most of that went directly to the original equipment manufacturers. And the set aside for the, which was the $5 billion for the tier ones and in particular the direct suppliers, that hasn't really been effective.
Thank you so much. Thank you. Mr. Overton.
I'm not aware of, we represent primarily Tier 2s and Tier 3 suppliers. I'm not aware of any of that $38 billion money that has trickled down to any of our members in either association, the National Tooling Machine Association or the Precision Metal Forming Association.
Mr. Jones?
As you know, suicide is a solitary...
Surface finishing side, I only know of one surface finisher that does direct work with one of the big 3.
To both the VA and other veterans.
He would be able to participate. All other surface finishers are in the Tier 3, Tier 4 level.
Further, our technology can provide
as far as the record to date from American Foundry Society, we've seen no money trickle down, and on the contrary, receivables are still being pushed out anywhere from over 60 to as many as 120 days. So the effect is devastating right now.
Thank you. To all of the witnesses, with the extended shutdown at GM this summer and the lingering potential for another bankruptcy filing, clearly businesses like the one that you represent will be bracing for more difficult conditions. Could bridge financing programs or other types of short-term federal assistance help your members weather this storm?
Costs less than $1,000. It is designed.
Yes, I would think that is
It's small, 3 pounds, portable, mailable, and provides a brilliant video conferencing image
don't necessarily want more regulation and the government involved, but we're in a situation where we don't have a
secure network.
Okay, let me ask you this other question. What size of loan will be necessary to support businesses like yours through the downturn?
Let me explain how being
what would be the average size?
benefits of that.
Tough question. First, because we represent, there are some folks that I know are $17, $18, $20 million in the whole.
Speaks with a VA healthcare
you get down to the Tier 4 or 5, $500,000 would get someone through the next 6 months, which I think is that's the thing I think we should think about, getting everybody through for the next 6 months.
Mr. Smith.
Second button connects
the
veteran to a 24/7
from our standpoint, the issue is that most loans are based on receivables. There, quite frankly, aren't any receivables out there, and that's the issue. And the issue with the crisis in the auto industry isn't as much as will my pre-petition bankruptcy amount get paid. It's what are we going to sell afterwards? And so I would like to see a program that's really going to help us, not on the downturn, but on the hopefully the upturn. So when things turn around, you're going to do that from a base of no receivables. So you actually have no cash to go ahead and to buy new raw materials, to fund your inventory buildup, and to start supplying. That's going to be the crisis for us.
Mr. Overton.
The GM possibility of bankruptcy or shutdown is going to be devastating to our Tier 2 and Tier 3 members. We're already feeling with Chrysler, but GM will be considerably considerably worse than what the Chrysler effect's going to have.
Often drive hours.
Our issue as far as loans,
inaccessibility compounds.
we're looking more to be paid for the receivables we have out there right now. We've got receivables typically with the payment practices of GM, Ford, and Chrysler. With the
also an excellent vehicle.
part approval process, we have receivables out there for 6 months to 2 years that are still several $1 million. If GM declares bankruptcy and being unsecured creditors and all that money's lost, the effect on our Tier 2 and Tier 3 members would be devastating.
Okay, let me ask you, if you knew, would your business be willing to pay a nominal premium for credit insurance, or perhaps its receivables, if you knew you would be paid in a timely manner and through a federal program or financing facility?
Absolutely. I think that's the answer. I think that's the cleanest, quickest answer. If it's comparable to what the Canadian government does with their EDC program, Export Division of Canada, they charge a 1 or 2 or 3% fee to insure those receivables. I think that's the cleanest, quickest. And we need that to desperately happen before GM files bankruptcy to guarantee those outstanding receivables.
Mr. Jones.
Benefiting both rural and urban veterans.
Thank you. As we all know, that cash flow is the life's blood of any small business. And as manufacturing opportunities are disappearing, then consequently that certainly affects the cash flow, whether it be with manufacturing through the big three or whether it be through other support industries for the automotive. But certainly any infusion of cash into the small businesses would certainly help them.
What will be the average size of the loan if you take that route?
It's difficult for me to say the financial structure of all of the industries. In ours, when we're looking at about less than 20% exposure on the automotive side, however, we are seeing opportunities that are disappearing and going out of the country in other sectors. Then hopefully we can start looking at some of the unfair trade practices and other issues that are affecting manufacturing to try to bring some manufacturing back into the country. Then somewhere in the neighborhood of probably $1 million.
But would you agree with Mr. Overton's assessment that paying a minimal premium for credit insurance or perhaps discount its receivable if you knew that you will be paid in a timely manner? That you will support that. Mr. North.
Thank you. I agree with the comments made by Mr. Overton, and I would like to add that it is difficult to assess the amount per each individual business based on what their leverage or exposure is with the auto markets. In conjunction with what Mr. Jones stated, we do need to, as we're looking at propping up these Tier 2, 3, and 4 businesses, we also need to look at really drastically reviewing those trade policies, bringing manufacturing back. But we also have other issues where we could create work for the industries that we're all here representing in the form of technological advances and all of our services providing work for renewable energy sources, alternative energy sources, and all kinds of things that we can make in this country. That's what built this country, making, manufacturing things. And we have other avenues where we should be putting some time and effort into as well. And I think that will help prop up the hit that a lot of these businesses are taking. We would have to diversify and maybe be a little creative. But again, that's what the ingenuity in industrial sector is what built this country to begin with, and I think collectively we can work together to pull out of a lot of these sectors.
Thank you, Mr. Norge. And now I recognize the ranking member, Mr. Gray.